Hello everyone, welcome back to All Financial Discussion channel. For this video is actually a series of discussion. Okay, so based on my previous video discussion, I have discussed how to determine whether this stock still a good buy or not. So basically this video I will continue but using another criteria to determine if the stock is still a good buy. This video I will use this price to free cash flow ratio in order to determine whether the stock is undervalued or overvalued. Okay, so I will use a step-by-step analysis. Okay, so in fact, later on, you can see that I will use this company, Coca-Cola, to use this method, price to free cash flow ratio, to determine if it's still a good buy or not. But you can always apply this technique to whatever stock that you want to determine. So basically, this will be the objective of this video. Before I continue, guys, I'd like to urge you guys to help me by like this video. Guys, just a few seconds, help me press the like button now. For those who are new to this channel, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer, this is not a financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you are willing to lose. With this, we are ready to kickstart today's discussion. We will use various criteria to determine whether the stock is still a good buy or not. So earlier on, I actually have discussed how can we actually use this price to earning ratio to determine whether a company is still a good buy. I have also extensively discussed on price to earning growth ratio, which is another criteria as compared to the earlier on the PE ratio. This video, I will focus on price to free cash flow. Okay, so why this is more reliable? Okay, because it is always harder to manipulate cash. So hence, this will be a very fair indicator to determine whether the company is still a good buy or not. Guys, if you have other criteria, please share with me. Someone actually suggests this to use this price to book ratio to determine whether the stock is still a good buy. Basically, this price to book ratio, I will use this for the banks, okay, to determine whether they are still a good buy or not. So basically, if you keen, okay, stay tuned on my next video to discuss on this price to book ratio. Again, there are various indicators to determine whether the stock is still a good buy or not. So guys, like I mentioned earlier on, if you have any, okay, feel free to comment so that I'm aware of another technique and I can extensively discuss all these different criteria to determine if the stock is still a good buy or not. Okay, so guys, let me know if you have other criteria. What is price to free cash flow? Okay, so basically this is a very simple matrix that actually compares a company's market capitalization or share price to its free cash flow. Okay, so basically this line you can see that there are actually two equations here, but the outcome of these two equations, they are identical. Okay, so let's take a look on this equation first. Okay, so this price to cash flow, which is equals to the market capitalization over the cash flow from operation. Okay, so another equation here will be the share price over the free cash flow per share. Like I mentioned earlier on, these two supposed to be the same number if you have the same input. Later on, I will have an example to determine this. But let's kickstart the discussion on PE ratio. Okay, so in fact, this method, PE ratio, will be the most popular way to determine if the share is still a good buy or not. However, okay, if you take a close look, this is earnings per share, which can be dividend. For example, imagine this, the company, okay, for example, they can do quite badly, but they give out a very good dividend. So hence with this, they may have a good PE ratio, which means that this portion here can be easily manipulated. Okay, so therefore we need to have another criteria, which is price to free cash flow, in order to prevent people from manipulate this number. Another way, which is the PEG ratio. From here, you can see that this is actually PE ratio over the growth rate. Again, the growth rate is very subjective for example, let's say we are going to anticipate the forward growth rate, which can be a challenge. So therefore, this price to free cash flow will be a safer way because they actually measure how much investors are paying for each dollar of free cash flow a company generate. Cash is actually much more difficult to manipulate. Just like now I ask you how much cash you have, show it to me. Then it will be much harder for you to manipulate this number. These two equations, I have shown it to you on my previous slide. I'm going to explain what is market capitalization and also free cash flow. Okay, so how can we actually compute this market capitalization? Okay, so in order to compute this number, this will be equals to the current share price. Okay, so what will be the share price today, for example, multiplied by the total share that the company actually offer. So when you actually multiply this, you will be able to obtain the market capitalization. Next will be your free cash flow. Okay, so how we can actually compute this? This will be equals to the operating cash flow. Okay, so operating cash flow, which means that, for example, you sell a product, you sell a service, you earn the money. Basically, all the money is actually what we call this operating cash flow. Next will be your capital expenditure. Okay, whatever capital expenditure, for example, the rental, the labor, the raw material, etc. So when you actually take the money that you actually receive from your product, from your service, minus away whatever so-called capital that you need to use in order to generate this money, this will be obtain this free cash flow. So what happened to this free cash flow? Okay, so basically these are the cash that you can use to pay dividends. You can actually buy back the shares. You can reduce the debt if you have the debt. And again, you can reinvest into the business. Let's come to the advantages and the limitation of price to free cash flow. Let's focus on the advantages first. Like I mentioned earlier on, this free cash is always harder to manipulate as compared to earning. Okay, so basically this will be the strongest advantage when we actually use this price to free cash flow. Next, capital structure independent. Okay, so this will not be affected by the different debt levels or tax situation. Third, real cash measurement. Okay, so basically they actually solely focus on actual cash available for shareholder. Next, investment consideration. Okay, so this actually account for maintenance or in the future expansion costs. Next, let's come to the limitation. Okay, first one will be the volatility. Okay, so this free cash flow, in fact, they can be more volatile as compared to the earning. Next will be the industry variation. Okay, capital intensive business, okay, for example, banks, etc., they naturally have different free cash flow profile. For example, mature company like Coca-Cola, they can be quite a high number in terms of this free cash flow number. Next will be the one-time item, okay, large capital expenditure, okay, or asset sale. They can actually distort the calculation, okay, because the capital expenditure is so huge. For example, you buy a place, a new place, okay, which eat up a lot of your capital expenditure. So this can actually distort the whole calculation. Next, on the growth stage, okay, so basically this is not ideal for early stage company that typically they will reinvest all the cash that they actually generate back into the company. Let me quickly explain the typical benchmark. Okay, so like I mentioned earlier on, okay, for the price to free cash flow, okay, for example, for 15 to 20, okay, so this is often considered potentially undervalued, which is a good buy. But for another extreme, okay, for example, when it is more than 25, okay, to 30, okay, so this is often considered potentially overvalued. However, I need to emphasize this. This, in fact, will be vary by different industry. If you still remember, we have the growth stock and also the value stock. Okay, basically all these will be also different. One simple way to calculate this price to free cash flow. Okay, so basically this is a very simple example. Okay, you can see that this market capitalization is 10 million. Free cash flow is 1B. So therefore, my price to cash flow is equals to 10. Okay, so this simply means that investors are paying $10 for every $1 of free cash flow the company actually generate. The bottom line, this price to free cash flow actually provides a cash-based perspective on valuation, okay, which means that they mainly focus on cash. Okay, so basically this actually can complement earnings-based metric like PE ratio. Okay, so when we actually calculate this, okay, it doesn't mean that we can remove the rest of the calculation. In fact, this PE ratio is also a very important metrics. Then we can use this price to free cash flow in order to focus on the cash base. Okay, so this is particularly useful for evaluating matured cash generating companies and comparing firms with different accounting practice. Guys, before I continue with an example, okay, using the company Coca-Cola, I need your help. Guys, help me to like this video. Okay, so this is very important to me. Just give me a few seconds. Help me press the like button now. For those who are new to this channel, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. Next, I'm going to show you an example. How can we actually compute the price to free cash flow? Okay, so I will be using this formula to compute the price to free cash flow with the company Coca-Cola. First thing, we need to determine the share price. Okay, so by now, I think this is quite easy for everyone. Okay, we can easily find out the share price of Coca-Cola. For example, now, instantly, this price is at $70.44. So this will be the share price. Okay, so basically I can record that I actually obtained the share price, which is 70.44. Next, okay, I need to find out the free cash flow per share. Okay, so which is known as this TTM, which is the trailing 12 month. Okay, so basically from this link here, okay, you can find the Coca-Cola, so-called the trailing 12 months free cash flow per share over here. You can see that the number is 1.21. So from here again, you can easily compute that, okay, for this price to free cash flow will be equals to the share price divided by the free cash flow per share, which is 1.21. So from here, you can obtain this price to free cash flow as 58. Okay, again, okay, you can easily find the number, okay, from the chart. Okay, but you probably can see that there is a slight difference. Okay, so this is because at different time, the number will be different. Okay, so therefore, okay, if the number or the input of the data is the same, the number will be consistent. However, I just want to show you another technique. Okay, again, from this link, okay, you can see that you can easily obtain the price to free cash flow. Okay, what will be the number from this thing rather than compute all the tedious way. So basically, these are the way how you can actually compute the price to free cash flow. We compute 58 and 54. So let's take something in between 56. Okay, so what does this mean? Okay, so this price to free cash flow 56 means that investors are paying $56 for every $1 of free cash flow generate annually. Okay, so now you probably will ask, is this still a good buy? Okay, so this is in fact very common for a very stable company like Coca-Cola. And in fact, Coca-Cola is known as a value stock. They People that actually invest into Coca-Cola only focus on dividend. So basically, this is why, okay, Coca-Cola actually has this high price to free cash flow. Okay, so another tools that you can actually determine whether Coca-Cola is still a good buy is basically compare against its own history. So you can see from the old history, okay, to determine if this Coca-Cola is still a good buy. So from here, you can see that definitely over here, Coca-Cola is still considered a good buy. Next, okay, compare against the industry peer in the beverage or consumer staples. Okay, for example, I think this is a little bit challenge, okay, because Coca-Cola is much more well established as compared to the rest. So hence for me, I think that Coca-Cola, when you actually invest into this company, you don't look hard on other factors. You mainly invest into Coca-Cola for the dividends only. So to conclude, there are actually various ways to calculate the price to free cash flow. This is another technique. Okay, so basically, if you need, okay, you can easily find all these parameters. But like I mentioned earlier on, these two equations, you should have the same outcome. Okay, so if you have the same input, you're supposed to have the same outcome. Okay, so from here, you can see that you can actually obtain the operating cash flow over here, and then you can find out whatever expenditure for Coca-Cola. So with this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.